watching World Insight, our special program focusing on the ongoing China's annual political season. China's 15th Five-Year Plan seeks to inject fresh ideas and innovation into businesses. In financial markets, further reforms on exit channels are on the government's agenda for the very first time. One top business executive who knows this best is Zhang Yichen, a CPPCC member and the chairman and CEO of CITIC Capital Holdings. And here is excerpt of our conversation on the sidelines of the annual political season in Beijing. 15th Five-Year Plan, center of attention for the world. Now, generally speaking, what do you make of it? The content and also the implementation plans.
You know, the Chinese government has always been very good at drafting these plans and then implementing them. So, you know, this is already 15th, so they have a very good track record in doing this. And this particular five-year plan, I think if anything, it's certainly very inspiring. It always sets, you know, these five-year plans always set very lofty goals, but invariably the government, you know, always was able to lead the whole country, to mobilizing people and
rally the crowd, and deliver. It's a phenomenon you certainly won't see around the world. Right.
But this plan, I think the emphasis is still very much on innovation, upgrading the economy, the industries, to move them up the value chain, especially given the geopolitical turmoils around the world. China is trying to make sure that we more or less protect our overall economic security. So that's the emphasis. But there is a balance, which is that China clearly all along has the issue of fairly weak domestic demand, certainly outmatched by its production. So I think in this five-year plan, there is more emphasis on domestic demand as well. So it's overall in my view, a very balanced five-year plan.
Now, according to the 15th Five-Year Plan, China wants to build a nation that is strong in finance, but also strong in science and technology. How will the merge of these two ideas be able to help your industry, to find more opportunities?
China actually, over the last several years, has ample liquidity. The government has been trying very hard to ensure there's enough liquidity in the system. And given the overall slowdown in real estate, so the overall, you know, the liquidity actually, a lot of it, other than two industries, doesn't have a whole lot more the places to go. Right. As a result, the investment returns, especially, I mean, fixed income return, interest rates have declined significantly. So at this point, 10-year Chinese government bond only yields roughly about 1.8%. So as a result, many Chinese investors, particularly insurance companies, are looking for assets with good cash flows. So what we lost from the international investors, we've gained back from Chinese investors. So that is one impact. The second phase in our business is to invest. Now, in the past, we have invested in the US, we have invested in Japan, in Europe. But in terms of international investment, obviously we have to be more careful. We are pulling back from the US. I don't think we're going to invest in the US anytime soon. We still have portfolio companies there. We're managing them. But we need to be extremely careful
given the uncertainties,
to commit to new investment in the U.S. So you know that is clearly, you know, these are the the results of these geopolitical tension that we have to watch out for. We all along we've been more focused in China in the domestic investment anyway, and just the proportion of that is higher now. So it doesn't fundamentally change our business model. It changes the fundraising model somewhat, but you know the international investors have different expectations or objectives from the domestic ones. But overall, you know, we still do our investment.
Right. There has been concerns about overheating in terms of investment in some of these specific areas of the economy, for example, about green industry, for example, about even now people talk about the concern on AI. What do you make of that, generally speaking?
Well, I think it's, if you do it by market principles and you let market forces drive these, you know, the overall economy, invariably you're going to find bubbles and
Sure.
over exuberance. So in the case of green industries, there was plenty of investment that went into it, but in the end, China as a country benefited. We certainly saw bubbles in solar, bubbles in wind power, bubble in EV. There's overcapacity, but because they were competing with each other, China as a country ended up with the strongest players in all these sectors,
Right.
the batteries as well.
So you're saying, well, that's the cost to be paid.
Absolutely, absolutely. It's
there more
never
efficient-
perfect.
Is there a more efficient way of doing it?
I don't. If you drive by market principles, you can never find a more efficient way of doing it.
And what about AI now? Artificial intelligence.
I think in some ways you may go through the same process. So there are so many players that in the U.S. They're only the big ones. In China, given the U.S. is trying to cut China off from the semiconductor, you know, AI chips and so on and so forth. So obviously China has to build its own technology stack, and so unfortunately you can't designate someone, you know, as China's NVIDIA. So you have to let them compete, and in that process, you know, if you have 10 of them competing to be the NVIDIA, maybe 1 or 2 will win, but the other 8 will drop, so you can call the other 8 bubble. But without their competition, you may not end up with the 2 that in the end survive. So that's how market works.
Right.
In any bubble, you're gonna have players who pretend, you know, to be a real, you know, AI or internet company, but in fact it may be just a company in name only. That's for the investors to, you know, to identify and decide for for themselves. But you can't, just because, again, just a couple of companies are maybe somewhat, you know, fraudulent in their claims, and you try to shut down the whole market.
We see AI has been used in so many different places. Of course, some describe the U.S. approach as reaching for the stars, so to speak, developing AGI, but others say this is also bubble. China, AI plus, mainly to put it into so many different industrial sectors and make it work. But how do you see this trend? And meanwhile, how do you see particularly AI recently in the latest geopolitical conflicts that has been used in military operations intensively? What does that mean for future investment opportunities worldwide?
Well, first, I think the rumors of how AI was deployed in the U.S. military operations, I have no knowledge of that. Even whatever is being reported, there are others who say that's, you know, gross exaggeration. So I'm not really going to comment on that. In terms of different approaches to AI, clearly the U.S. is leading on the cutting edge of big language, large language models, and with huge computing power, the whole AI tech stack, they are able to, to build amazing, models. But China, I think in some ways, it's following very closely. And a year ago we had DeepSeek, which shocked the world, with very limited, much more limited computing power than the U.S., but was able to achieve results comparable. And in some ways, on large language model, that's what Chinese players basically position themselves. They're followers, but they at the same time follow a open source system, which will benefit the whole world. And China overall is much more focused on applications, because at the end of the day, they have to create value. The U.S. is creating the big models, are clearly creating value in software, but China is using them for hardware, and largely because China produces, has the largest industrial capacity, and has a complete industry chain and a very comprehensive system. So in some ways, China is trying to be much more targeted. In some ways, actually much more sort of a value focused as well as profit focused, because that's how, in some ways, how the AI revolution can sustain, because ultimately it has to generate value.
Right. Thank you so much. As always, I learned a lot.